Welcome everyone to the Vested Interest channel. This is Shane back for a stock pick of the day video. This will be the last one of the week. We're going to take a look at Kinross. This is out of the material sector, a gold mining company here. Now, this is the vested interest stock screener. This is the criteria we will be running through. This is the screener that I use to find stocks out of the thousands of stocks that are out there that I am interested in doing more of a deep dive into the financials of the company. And if they make it through the screener, must meet 5 of 8. In this case, if it was out of the financial sector, we would add in price to book, and then it would be 6 of 9. And does make it onto my watch list. That does not necessarily mean that I am buying. It just means, again, I'm interested in doing a deep dive into the financials, looking at their balance sheet, their income statement. So this is just the initial screener to kind of whittle down the number of stocks I even want to do a deep dive on. And if you want to know more about Kinross, check them out on their homepage, www.kinross.com. That's www.kinross.com. That is their homepage where I pull this information from. Founded in 1993, Kinross Gold is a senior gold mining company with a diverse portfolio of mines and projects in the United States, Canada, Brazil, Chile, and Mauritania, headquartered in Toronto, Canada. Kinross is focused on delivering value through operational excellence, balance sheet strength, discipline, growth, and responsible mining. So they are a mining company really primarily around gold. Obviously, Kinross operates 2 mines in Nevada, one of the top mining jurisdictions in the world, and 2 mines in Alaska, where it has successfully operated for more than 25 years. But then again, they have mines also in Brazil, Chile, Mauritania, Canada, and then they do exploration probably in all those places and maybe some others if they're looking to expand out. Exploration is just looking for more places to mine gold. Now, the reason we're taking a look at them down 4.05%, we are talking about Kinross Gold Corporation, ticker KGC, out of the material sector. This is actually one that I held was about 2, maybe 3 years back now, and I sold them just because, one, there wasn't a whole lot of growth at that time in the gold market. The gold market has really exploded. I mean, I think I was holding them in the $7 to $8 range. Maybe it got up to $9 at times then, but 24, 28, 2, maybe 3 years later now. So price appreciation has been there, but there was no dividend growth. We'll see if that has changed recently. Now, closed out the day at $24.28, down 4.05%. As I mentioned, 52-week low as $8.99, as high as $25.91. They are much closer to their 52-week high than their 52-week low. They do have a market cap of $29.598 billion, a beta of 0.88, so less volatile than the overall market. A price-to-earnings ratio at $19.59. Earnings per share, EPS, is at $1.24 per share. Earnings date coming up November 4th. They do pay out a 12-cent dividend. I can't remember if this one is quarterly, if it was semi-annual. It might be an annual or semi-annual payer. We'll see that here in a little bit. With a starting dividend yield that is very low at 0.47%. Ex-dividend date August 21st, so we are past that. Looks like they paid out September 4th, so you would not be in line, or I'm sorry, you would be in line for the next dividend, but you're going to have to wait a little bit to get one. 1-year target estimate, $22.38. Looks like actually, according to Yahoo Finance, they are a little overvalued and may come down to that $22.38 over the next year. But that is just from Yahoo Finance. I'm not affiliated with them, just one of the sources I go to look up different information. Now, jumping over to the right, I like to look at dividend yield theory to see if a company is potentially undervalued as part of the initial screener. To do that, you take the 5-year dividend yield average, 1.87%. You compare it to the current, and you could use 10 years if you wanted. You could use 1 year if you wanted. I like the 5-year. 5 years, compare that 1.87% to the current 0.47%, or over here forward 0.47, same number. Since it is lower than their 5-year average, that speaks to overvaluation. For dividend yield theory, the numbers are inversely correlated. So if it's higher, it's undervalued. If it's lower, like it is in this case, it's potentially overvalued, at least according to dividend yield theory. Payout ratio is very low at 9.68%. So if they aren't raising their dividend, it's so low, I just wonder why they don't. Dividend date, again, we looked at that already. Now, growing free cash flow, I like growing free cash flow because companies can do some things with that cash flow. They can pay down debt, make acquisitions, reinvest back into the company, buy back shares, which it looks like this company did back a few years ago, nothing recently, pay down debt, make acquisitions, I think we said it, pay a dividend, which this one does, and hopefully raise that dividend as well. Going back to December 2021 here, $313 million in free cash flow. 2022 was actually down to $285 million. 2023 was up significantly to $507. 2024 up even more to 1.3 billion, trailing 12 months to 1.9 billion. Now keep in mind it is higher, so it definitely looks like growth, but it still include part of 2024 numbers for the trailing 12 months, which is what the TTM stands for. Now, looking at repurchase of shares, they did back in 2021, 100 million pulled out. 2022, so maybe there was some growth in 2022, because if you look at the repurchase of capital shares, shot up by 3 times what they did in 2021. So even though it looks like they went down, it definitely is more than accounted for with the repurchase of shares. So yes, that looks like growing free cash flow if you include the 2022 because of the repurchase of shares, which is at a little over 300 million. But nothing in 2023, 2024, or so far in the trailing 12 months, which is odd because their free cash flow has more than doubled, tripled almost. If you look at the trailing 12 months, it has tripled. Now, jumping over to stockanalysis.com, another source I go to for information. I'm not affiliated with stockanalysis.com, and I do recommend 2, if not 3 sources. So the information you are looking at, you can compare it and make sure that it is accurate and it all looks the same. 5 analysts over there at stockanalysis.com, they call it a strong buy, low estimate of $15. It would need to drop 38.18% to get to that $15. Average estimate of $19.80. It would need to drop 18.4% to get to that average estimate. High estimate of $27 is the only way you're going to see some upside in this one, and that would be a potential 11.27% if it was to make it from where it currently sits. Now, jumping over to the right, I like to look at some statistics: return on capital employed and earnings per share growth. Return on capital employed, I like above 10%, so they're sitting at 21.67, so that's well above the 10% I'm looking for there. Now, for earnings per share growth, EPS growth, I like above 5%, which they are negative 6.95%, which we don't want to see negative. Negative revenue growth, too. I don't like to see that, even though that is more in line with the deep dive numbers that I look at, not part of initial screener. Quarterly payer. Okay, so they are a quarterly payer. Payout ratio very low, 9.68%. Still not growing their dividend. Buyback yield is positive, so they are pulling more shares out of the market than they are issuing. Shareholder yield is positive as well, 0.54%. Even though they haven't bought any shares back in the couple years, they must not have been issuing any shares. But this is what I didn't like. Now, they do pay out March, June, September, December, like most companies do. That's the typical payout months for dividend payers. March, June, September, December. Typical payout months. Most companies pay out in those. So when I talk about months that are off schedule, they pay outside of these months. 30 cents going back to March 2023, and it has remained 30 cents. I mean, I think that's probably what I was getting whenever I held them 2-3 years ago, right? 30 cents. And I think they go back even further than that at that 30 cents. They hadn't been growing the dividend for a while, was part of the reason, with a low payout ratio, I might mind you. But I will say their price appreciation has gone up significantly because the price, and these companies are, mining companies like this, tied directly to the price of precious metals, gold and silver, for example. Gold primarily, which is what this company focuses on. Silver is usually a byproduct of that. But anyways, they are definitely seeing a surge in the price of gold, which has helped them with price appreciation. I just don't understand why they're not translating any of that to increasing their dividend, and for the last couple of years not buying back any shares. All right, let's run them through the screener and wrap this one up. Understand the business. They're a mining company. They're mining primarily gold. Growing free cash flow, yes, I'm going to give them growing free cash flow, because even though it looks like the 1 year was at 2022, it looks like a down year. If you look at the repurchase of shares, which went up by about three times what it did the year before, it does look like they had free cash flow growth. They just used some of that free cash flow growth to buy back shares, which I don't mind companies doing that versus raising a dividend, but I want to see at least one or the other. Growing dividend, no. Dividend's been stagnated. Like I said, that's part of the reason that I got rid of them a couple of years ago. Dividend payout ratio of 75% or less, yes, it's well under 75%, which is, again, why I don't understand why they're not growing their dividend. Dividend yield theory, it says they're potentially overvalued. No check there. It is not within 15% of a 52-week low. It's really right up against its 52-week high. Return on capital employed is above 10%, so check there. Earnings per share growth was actually negative. No check there. We didn't look at price to book because this is not a financial company. Looks like 4 out of 8 doesn't quite make it onto my watch list. Needs to drop more in price to be really something I would be interested again. But with gold prices surging the way they have, I'm not sure if it's going to drop anytime soon as far as where the price per share is. But it would be nice to see them raise their dividend. Maybe they could get dividend yield theory to jump on your side if they were to do that. We'll see. Let me know what you think of Kinross Gold, and is it in your portfolio? Is it one you're watching? Maybe it's one you're selling. Were you part of that downturn today and part of the sell-off? Let me know what you think in the comment section down below. And that's really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Again, let me know what you think of the video. Let me know what you think of Kinross. And let me know, are there any companies that you'd like me to cover in the Stock Pick of the Day's series, Stock Pick of the Day series? For you. I could run it through my screener. Let me know if you have a company that you are interested in. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, hit all those buttons down below before you go. Thanks for stopping by. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investment journey for educational and entertainment purposes. Investing involves risk. You can lose money, so never invest any amount. You're not comfortable losing it. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of counsel, a certified financial advisor.